11.
What's up, guys? It's Steve Berconi with Team Berconi, back with Alfredo Vistola, and Justin. He's a partner at New Jersey Lenders, one of our preferred lenders. Excellent lender, excellent guy. Thanks for joining us today, Justin.
Thanks for having us.
So as we get started, and I kind of went through when I first started the podcast with how I got into the industry, how I got into real estate, kind of the background I came in, and I was curious, and we spoke a little bit about this, but when you first got into lending and kind of came out of college, I know you were a college athlete, you played soccer, so there's some parallels there where I always speak about athleticism and sports and competition and how that kind of helped me. I wrestled, you played soccer, but it's very similar in the sense that there's a lot of competition and there's a lot of training involved to perform.
Right.
And I think our businesses are pretty parallel too with the lending side and getting people home mortgages. It's very intricate, it's involved, it's complex, but rewarding if you're able to provide those clients financing options, which you do excellent. How did you first get into the industry?
So I first got in the industry. I actually worked on Wall Street first 2 or 3 years when I got out of school. And then I jumped into the mortgage industry back in 2005. Back then, the market was really hot. I had actually friends in the industry that were doing very well. I was working on Wall Street, and based on my competitive nature, I was sitting behind a desk, and I felt like I was wasting my talent. So I got out there, got into sales, got into the mortgage industry, worked for a broker initially for a little under 4 years. At that point, I made the switch from being a broker into a correspondent lender, which is what New Jersey Lenders is now, where I controlled underwriting and processing in my office. So, but initially after school, I was an economics major, business management minor. I got into Wall Street, had my licenses, et cetera, and then stayed in the finance game, got into the mortgage industry.
When I set out to do real estate, pretty similar. I didn't work for Wall Street, but I worked for a venture capital firm. So they're both very competitive markets. And same sort of thing. I felt like I was working very hard for someone else and they were reaping the rewards. I was getting experience, right? But when I came into real estate, I always wanted to approach it in a business fashion and develop myself, and had a vision of building a team and kind of a brand and that sort of thing. And you have a large team.
Correct.
And do it on a super large scale with high volume, but still we also do really focus on the customer service and keeping clients more than satisfied, very happy, so they come back. Was that always your vision? Was your vision always to build a brand and a large team?
It's funny. It was a vision. I could tell you that it took me quite a number of years to get to that point where I could delegate responsibility. I was more concerned with being a control freak, wanted to handle everything. It took me, I probably would say 7 or 8 years in the business before I understood that I couldn't expand.
It took me almost 10. Yeah, so it's pretty similar.
It took me about 7 or 8 years before I could hire some of my own help. I was doing everything on my own. But yeah, 7, 8 years down the line, I realized that I needed to hire an assistant. I needed to get my own processing team just to be able to expand, just because obviously there's not enough time in the day, right? So I developed a process, a system that works. Customer service is the priority. I didn't want to get too big and not be able to accommodate the client, right? So we developed a system in place where I'm hands-on pretty much the whole way through. But my teammates all have their role, right? So usually I structure the financing up front, and then it moves down the line with my team.
You're extremely responsive and accessible, and I find that as a team leader, I try to be. But when I reach out to you, you're either like, I'm in a meeting, I'll get right back to you, or you just answer the phone.
Right.
Yeah.
That's pretty extraordinary for the amount of volume. It's hard, and I'm kind of on the other side with real estate. With regards to your team and your structure, how does it work? So if someone contacts you at New Jersey Lenders and they say, hey, Justin, I'm thinking about buying this house, I need a pre-approval, I imagine they would say something like that. How does it go, and how does the ball get passed throughout your team in order from that point until closing, without getting too involved? But for example, you just mentioned underwriting, which Alfredo and I are familiar, but the audience might be like, oh, what is underwriting, right?
So nowadays technology plays a major role in how the system works. borrower calls me up today. Hi, Justin. I'm looking to get a pre-approval. We'll have a brief interview over the phone. I'll determine the scenario, what type of property they're looking to purchase. I'll then either send them an application to their phone, right? Or I'll send them to my website to fill out some information, their financial profile online, whichever they prefer. Nowadays, most people like working on their phone. So the app that we've created speeds up the process. It's very simple for people to fill out, but it also gives me a chance to, track to see what step they're on, et cetera. So once the borrower is able to fill out their information, myself or my assistant Josh will end up calling them just to review credit, income, et cetera, determine max qualification, and so on.
So for some of our listeners who are not, familiar with the mortgage industry outside of I'm buying a house and I don't have cash to buy it, I need money. What are the varying aspects of, you have direct lenders, you have mortgage brokers. Can you explain benefits of, what you guys do versus the other options?
Right. So in our industry, there's bankers and brokers, if you will. Where NJ Lenders is more on the banker side, where we actually underwrite, process, and fund the loan in our office. The broker side is more of me taking a loan application, sending it to an investor, and they do the underwriting and processing. So being a correspondent banker allows us to have more control over the file, the speed of the file, and know the guidelines, really. So we're not relying on another investor to make.
You guys have underwriters in house?
Correct.
And underwriters, for the audience, you could probably go into more detail, but basically they ensure that the borrower is qualified with all the documents.
Correct. So upon application, the borrower fills out their information, and they provide supporting documentation like income, W-2s, pay stubs, bank statements, 2 forms of ID. Once they provide all the information, we package it up. We send it to underwriting. Their job is to verify the income and the assets that are listed on the application, and the documents provided meet all the conventional or FHA or any of the underwriting guidelines.
With regards to that process, from our client's perspective, they've been overly set. They've been ecstatic, right? And so that's what we want as an agent. If we pass a file over to someone, we want to know that not only they'll close the file, but that the client will be extremely happy, because we're kind of giving that responsibility out to you, and you're going to be able to fund the loan.
Right.
What do you think makes up? Why are you guys better? You really are. And not only with rates. I mean, you guys are very competitive with rates, which is important, but the rate is only so good. You can go to a big bank, which I've done it myself personally. It's just a nightmare. It's just like, I'll pay extra. I mean, like it's just completely, they ask for the same thing 8 times. You guys have a streamlined process with seriously competitive rates,
right?
But you're able to appease the client, make them satisfied, and I'm sure a huge referral base because of that. But what separates you?
So I'd like to say that my experience, honestly, when I review and interview the borrower, potential client, we go through the whole process. We're going to determine exactly what product they're going to be eligible for. So I find that myself and my teammates will be able to determine the product line up front, right? And we make sure that we document all the income and assets up front through the portal or the app on their phone. It gives them a centralized portal. It's not an email. I sent you this, I sent you that. Everything's on a centralized portal. So that way the borrower can see what's there, and then we can also see what's there. So it
doesn't get lost in emails.
It doesn't get lost in translation. Everything is very easily explained, what's missing, what's not missing. But we try to gather all those documents up front. The more work we could do up front makes obviously the process
So it
easier.
sounds like diagnosing exactly what would be best for the client as far as programs and that sort of thing. And
Correct.
then also, like I just said, it was very frustrating continually sending the same thing. I'm like, I literally sent it to him on the 18th, and I'm forwarding the email that that he responded to.
Right.
So you're saying you also have a central almost database for that client's file where you can both see if it's there.
Correct. It's on the app or the link they create on our site. And it gives them access to see what's going on, right? They could see what documents are still missing. There's tabs for every document that's required. It makes things a lot easier, right? You send someone an email, it could get lost in their inbox, right? Yeah. So I can understand with some of those banks, it's a frustrating process, but we're trying to take that back and forth out of the equation, because that's the frustrating process.
Gotcha. We were just talking before we went live on the podcast with
Mhm.
you've been in, I think you said since '05. I've been
Yeah.
in the business since '02. So we've seen a lot of ups and downs. We've seen 2 cycles now, I guess.
Right.
How would you rate today's market? And so if someone's going to buy a home now, or maybe even a first time buyer, what advice would you give them as far as programs or just market advice, or, when they contact you?
The first question that I would ask is affordability. I want to determine affordability. We usually work backwards, make sure that client's comfortable with payments. So it's not a matter of how much you can qualify for. It's what payment that you guys feel comfortable with, right? So that's the most important part to the process. So given the current environment with rates being obviously higher than what they've been over the last couple of years, historically not high, but they've been higher over the last few years, things are becoming more expensive, right? So the client's comfortable with the payments, we'll back into a sales price, an average property tax for the areas they're looking in, and a loan amount that fits their budget. We try to explain to them today, we're trying to acquire the asset today, and with hopes in the next 12 to 24 months, we see a decrease in rates. There's going to be less competition today. There's going to be in 2 years if rates drop. So if you can afford it and acquire the asset today, and you can refinance that asset in 1 or 2 years, you're in a better spot than what you will be in the event the rates drop and the market goes really crazy again. The demand will spike, the values may increase. So with lower rates, higher values, if you can afford it today, the higher rate, lower value may be a better play.
And the refinance is you're going to redo the loan at a lower interest rate.
Correct.
And how does that process work with your company? Do they just reapply based on?
Yeah, it'll be a new application. People's scenarios may change, so we just want to make sure that they qualify again. So it's another process, but it's much more streamlined process than the actual purchase transaction.
Sure. Well, let me ask you about that. If you're able to lower someone's rate, obviously you do want to reapply, but if they're already at a level of unaffordability and you can drop their rate, how does that qualification process work? Because you would essentially be saving them money.
Yeah, if assuming the income, their job is all the same, then qualification shouldn't be an issue at all.
Well, I guess my question is if they're paying a higher rate and they're paying more out of pocket,
right?
If they don't qualify, they're keeping the same rate. Is that right?
Essentially, yes.
Okay.
Yeah.
All
Yeah,
right.
they have to requalify for
They have
the
to
loan. That's always been the
requalify,
case.
I mean,
The safety
people's
net.
situation.
Because no new investor is going to want to take that loan.
Yeah,
That's the problem.
They essentially every scenario could change, right? New job, different type of job, may have gone from a W-2 job to self-employment with different regulations. So credit history may change, credit score may change.
Yeah.
So there's a lot of variables. It's a new application process that we go through up front, right? But you don't have sellers to deal with. It's just myself and the borrower itself, just to get.
Is that qualification a little bit easier?
Income and asset wise, same process. Yeah.
I think it's there's regulations involved with these loans too. There's compliance involved, correct?
Right.
Like you can't just waive things because they're already a client.
It's a similar process,
Right.
just a lot quicker.
Right. We speak a lot on the podcast with mindset, and I kind of alluded when I introduced you as a competitive athlete and that
Right.
sort of thing. How do you feel as though being a competitive athlete prepared you for life for this job? And also a second part of that question, I feel like, and I really do, that you and I have parallels, that you're a very nice person. I try to be as nice as I can, but you're a great father. You're a family guy.
Right.
You balance your life, which I feel for me, and I feel probably for you, I don't want to speak for you, but it makes you a better businessman, a better father, a better husband,
Right.
a better friend. How do you balance that? And again, the first part of the question was, do you feel as though being a competitive athlete, and you did it at a higher level than
Yes.
myself, you played in college, and that's another whole
Yes.
level, but do you feel like that helped you?
100%. I attribute most of my success to, and I correlated to sports. It's similar to training for any sport, and you achieve results based on the work ethic, right? So when you get into outside sales or any type of sales job, it's how much work can you put into it, right? So when I first started in this industry, before, I don't even know if we had email back then, but
We didn't when I went.
No, I mean, I was on the road 7 days a week, outside sales in my car back when real estate agents were all in the office and there was one computer there and one printer, and they had to print out their listings to give to their client. So I worked 7 days a week. I drove to every single real estate office in Bergen County. I met as many agents as I possibly could. And over time, I was able to develop a book of business, but similar to what I did with soccer, I trained when I had practice, I trained before practice. When I had practice, I trained after practice. I was the first guy there, last guy to leave type of situation. So thankfully, I been able to attribute pretty much that competitive nature to this business, and I was able to develop a following, and now I have a very large database of clients and past referrals and real estate agents and accountants and attorneys that I work with on a regular basis. But and as far as the life work balance with 3 boys that all play every sport you could possibly imagine, I try to utilize technology. I try to make myself as efficient as possible during the day. So it's important that there's not a lot of time wasting activities that I'm doing during the day. So I basically, when my kids have after school activities, I structure my work day around that. And I basically, if they're at practice or whatever the case is, I'll set up phone calls.
You obviously won a lot, and you went to college and played soccer. You were mentioning before we went live that you I think in the state finals or something, you lost on penalty kicks, and I actually I think I lost by like 1 point in state or New England tournament. I don't even remember now when I wrestled, and it was really awful, and it was a tough situation, but I learned a lot from that. I learned probably more personally from the losses, even though they were few as I progressed, than I did winning. I expected to win. And when I lost, I kind of went back to the drawing board and figured out. Do you feel like that helped you? Could you just, the reason why I ask is you just mentioned you did something similar to what I did, where you went out and you drove the business. And there's, at least for me, there was rejection involved in that, where people have relationships already. There might be a million reasons, but it was, and I felt like competing in sports and not always winning and feeling what it was like to lose and then getting more hungry for a win, that helped me. That drove me. I don't know if that was similar.
Similar to wrestling. You got to learn to lose, right? Losing creates hunger, right? So
in a winner, it does.
Correct. Correct. So
you don't quit.
You have to lose to be able to win, in my opinion. Right. So the rejection in the industry was probably 90% of the time when I first started. Right. So, but yeah, definitely learning how to lose creates hunger. And being able to accept losing and knowing what you need to do to get to that next level. So you have to put the work in. And similar to wrestling and soccer or whatever sport it is, it's additional training and working on things that you're not good at or uncomfortable with is how you get better.
Yeah. And that's what no one wants to do. It's easy to do what you're good at.
Exactly. No one wants to do the uncomfortable things, right?
Right. When you're working on files that are more difficult in the lending process, are there things that you find that your staff or yourself or your team does proactively versus, in other words, when we indirectly sometimes have to work with, don't have to, but we work with lenders because someone either has a lender that they've chosen, or they go online and use one of these national companies that they really don't, in my opinion, have much of an idea what they're doing. And they try and cookie cut everything in as a square box. And then they get denied in the end. Whereas I find that the probability of someone get denied with your company is remote. And if it happens, it's immediate and it's valid. There's either not a job or the credit's so low, they just don't qualify.
Right. So just to touch on that a little bit, at NJ Lenders, we'll underwrite to the actual raw federal regulations, right? So Fannie Mae, Freddie Mac, they put out conventional regulations that all banks must meet, right? So unfortunately, when you go out to the street and you go to one of the retail banks, they add additional criteria or what they call overlays to an existing federal regulation. So the good news with us is that there are no overlays. We're underwriting directly to what the raw regulations state. So there's probably a good 10% of the people out there that get rejected from a bank just because that's the bank's regulations. That's not the real regulations, right? So those people should qualify for a home.
Yep.
And being a direct lender and underwriting is in house, if you will, it makes that flexibility on the product line to push things to the max by regulation, whereas at a bank they don't have that flexibility.
Right. What would you tell the consumer, the client, to look for in a lender? I feel like with agents, we're more out there in the sense that, with the profiles, and we're mailing constantly, and they see us at an open house. So they're familiar with who's kind of doing activity. I knew you were a top producer before I met with you,
Right.
but I didn't know how intricately involved and detailed and strategic your team was until I worked with you.
Right.
What would you tell the client who maybe knows less than I, just because I'm involved every day in this,
Right.
what to look for when selecting a lender?
That's a good question. I say that when looking for a lender, you want to look for, obviously interest rates are important, right? They want to look for any of the bank fees that they charge. That's very important. They want to look for product line, right? They may not offer first-time home buyer programs within the state of New Jersey, right? There's a lot of products that they may not know that they're eligible for if they're just contacting where they bank, right? So most of the banks have very limited product line. So they should look for, in my opinion, a local reputable lender like NJ Lenders. And there are other companies in the area, but if you are a first-time buyer, consulting with a loan officer from one of the local reputable lenders is going to give them as many resources as they can possibly get up front to make a decision on what bank they want to go with. If you contact your bank, you're going to just get the product line that they're willing to offer, and that's it.
Yeah, I mean, maybe I'm right or wrong. I often tell clients that they're in the business of collecting deposits, right? So you're better off. Your customer service is going to be better, and your percentage of opportunity to closing is going to be stronger when you're working with a company just like NJ Lenders, who their primary business is lending for home mortgages.
Right.
I also think it's trust.
Yeah.
Well,
you kind of hit it where you said the fees, because you've kicked files back to me like, this guy's paying this fee. I would never charge that fee.
Correct.
And it it's not that you couldn't charge it. You decided not to charge it because you felt like that's the right ethical thing to do. And I'm going to earn the business, and I don't need to charge that fee. And then I'll get referrals from it.
Correct.
And being a local person with a family here, for me, being in the service industry, it's a no-brainer. Like I would never go national. Now that I know what I know, I'm going with someone local who I can trust, who's here. I know where you live.
Right.
It's just a no-brainer.
The other thing is service too.
Yeah,
right. So
100%.
Most of the banks are 9 to 5 type of Monday through Friday. Maybe it's Saturday till 12.
Well, even if you have a local office here at Bank of America or wherever, they might be at a Minnesota or wherever the heck they are, and you're trying to reach them. It's different time zone. It's a toll-free number. It's a nightmare. Whereas you guys have everything there in house, and
you
you're
have
local.
direct access to our cell phones. Call after hours, weekends. We're there to accommodate the transaction. Our goal is to get us to the finish line, and we want to make sure that you're getting the best deal possible, best rate possible. We want to make everybody happy in the transaction, because that's our main focus. That's our main line of business, right? Our business is closing loans, right? So repeat business, referral partners are what we strive on.
Yeah, I guess that's what I was getting at. If they're in more of the deposit business, they're going to look for the perfect client or the perfect property. And if you don't fit in that box, they start hawing and hemming, and we can't do the loan. And I think even with you guys, when you do run into scenarios that, roadblocks, there's more of a willingness to work around them or figure out, before we close this out, what else are we not seeing?
Right. Yeah, no, we'll exhaust all options at that point. Most of the banks, if they see something in the file they don't like, it's an automatic, rejection.
Yeah, like I was saying, a square box.
Yeah.
With regards to the industry itself, you generally seem like you like it. Obviously, it's a stressful job, and ours is too, and it's high intensity, and again, the response time has to be there. What do you like most about your job?
Honestly, helping people. I honestly think that helping people get into their dream home, right? It's probably the biggest financial step in someone's life. And we want to be a part of it. you know, and I feel that based on my experience and knowledge, and I do believe that the rates that we offer and the fees that we offer, I'm usually waiving fees for most of these borrowers. So I'm giving them the best possible deal that they can get while utilizing my experience on the transaction.
Yeah.
What are some of the programs? I know. I mean, I know them. We work
Mhm.
together, and you got some excellent ones. But what are some that some people might not be aware of that they can jump on an opportunity now?
I would say more or less the first time home buyer stuff is really popular nowadays. I mean, the state has a couple programs with down payment assistance. Most of the buyers, they don't realize that, you know, if they put a lower down payment, then there's additional insurances like PMI that are required. But with a lot of these first time home buyer programs, we can get that waived. So they'll get a discounted rate, no PMI, or there's the state's got a very, very, very good program right now with down payment assistance based on the location of the property, which is good.
And we're going to put your Instagram up so that people can contact you directly.
Yeah, definitely.
For any of those programs.
You know, a lot of some other niche products that have entered into the market, kind of similar to 2007, 2008. You know, is really geared for self-employed borrowers. You know, guys that own businesses that have a challenging time getting a loan based on tax returns, et cetera, et cetera. So there are a lot of products out there that are giving them the opportunity to actually get qualified.
I think that's what's kind of nice about you too, is it's very customized.
Right.
There's not, again, you're not in a square box. So if the client were to contact you, you're going to really take a step back and look at all the programs that you have to offer and figure out which one might be best for them, or give them several scenarios on what might work.
Right.
On a lighter note, with regards to the industry, do you have any, you might not, but do you have any funny stories with clients or your team or something that happened that you remember that's memorable?
Funny stories. I really don't. Let me think about that.
You guys are in the office too much.
Yeah,
I figured with your staff something might have happened that was like we could tell stories all day.
We get out of the office a little bit.
Like all kinds of stuff happens with us.
Well, quick back on the self-employment. I think a lot of people may not understand. You know, they get excited to get a home, and then they've only owned a business for a year, for example. Can you explain? I think that's really important to go over with some people to prepare themselves to you know, talk to a lender, because there's certain requirements there.
Right. You really want to be when you're self-employed, you want to be self-employed for at least 2 years. That's like the main regulation there. We understand, and there are products out there, the first 2 years of the business may not be the most profitable on paper. However, you may have enough money for a down payment. So there are products out there that will do cash flow analysis on the business to make sure that they have the opportunity to purchase.
So yeah, as to Steve's point, you really try to look at the borrower and see, you know, instead of just checking off a box and they don't qualify, to go through your programs and see if there's something that's going to work out, which I don't think you get from some of these other branches.
No.
The last question I have is just, and this is a forecast question that no one would know the answer to, but where do you see the market going from here? We hear all kinds of things, and you've been in the market, I guess, 17 years now or 18 years now.
Man.
So it's hard to tell.
I mean, it's obviously inventory is a problem, right? We discussed that.
Yeah,
before.
that we can all agree on.
Yeah, it's and hopefully, I mean, hopefully we're at the peak. I mean, hopefully it can only get better from here.
Peak as far as rates being high?
Correct. I mean, the feds are supposed to meet again, maybe raise it 1. They're saying possibly 2 more times. So
if they raised it 2 more times, let me ask you that. What do you think that would do to your application process?
The question is the market's already priced in? Is the expectation for these increases already priced in the market, which I do believe is
right, unless they go over what the expectations would be.
Correct. I mean, inflation looks like it's kind of halted a little bit. The CPI index came back lower 2 weeks ago. But it's hard to tell. It really is. I personally thought by this time we should have been past this, but we're not. So, and the question really is, when the rates do drop, what's going to happen? Is the inventory going to kick up? If there's inventory that's going to kick up, and the people that were in the market when the rates were 5% are not in the market because they're almost 7% now. But if they drop back down to 5, does that demand spike? And then there's a high inventory and maybe a perfect storm. I don't
Yeah.
know. I don't know.
Yeah, it's stupid to determine. There's a lot of factors. That's what's hard to
Yeah, I
forecast.
know.
Whereas the last crash, as we saw that developing, we were all kind of walking on eggshells. And you see these clients that I would have get qualified, no doc.
Yeah.
Literally, they would supply
Nothing.
nothing. And I was building homes in Arizona at that point, and that was even worse out there, where we would be selling these homes. People would get approved in, I don't know, a week, 2 weeks, because it was literally they'd be willing to pay whatever it was, 1% more, or maybe more, I don't remember, but for literally no doc. You just had to prove you were you, and that was it.
Well,
That's not happening.
That's one of the big differences too, because the mortgage availability index is almost, it was skyrocketed back then. Now it's below 100,
Right.
the ratio that they use. But I think makes it a little bit of hopefully more predictable. But
yeah, I would agree with that. I mean, today to get a mortgage, the qualification's not easy, right? It's important that people have documentation to show that they can repay the loan. That's the key. Back then in 2008, when that bubble burst, it was no income documents, no asset documents, just do you have a job?
Yeah, hopefully we learn from
You know
that,
what I mean? So I think we've definitely learned
Yeah.
from that. The pendulum swung way past where it should have been, but
it was really hard at first.
Yeah.
People don't remember that. I mean, people that should have qualified, in my opinion, that had really good jobs, they had trouble, and they had to keep producing docs because they went so far the other, and then they loosened up a little bit with the guidelines, but for a while.
So it's going to be a question of demand, right? I mean, demand, if there's high demand, and then at what point, at what rate does seller okay with trading a super low rate?
That's what it is, the trade, because they have the equity in the home.
Need the inventory.
Yeah, I think a lot of people have built up equity. It's at what point do they want to make that trade? And we got to figure that out, or the Fed should be figuring that out at some point.
And then the underlying factors, historically during a campaign year, things get better. So that's right around the corner.
Yep.
Yeah.
Well, I appreciate you coming on. Justin's partner at New Jersey Lenders. We put your Instagram up a couple times, but please reach out to him. Can't say enough good things about you as a person, but obviously as a lender. Amazing stuff. I appreciate you coming
Thanks,
on.
Steve. Thank you guys for having me.
Thanks, Alfredo, as always.
Thank you.
S. Bricconi and at Team Bricconi and at Vast Real Estate. Please reach out. Please subscribe.
YouTube, subscribe.
Yeah.
Team Bricconi.
Thanks, guys. Have a great
day. Thank you.